Yo, check it out, I gotta speak the truth about the hardest working small channel.
The Fed holds meetings every 6 to 8 weeks in order to discuss whether to raise, lower, or maintain their interest rates. They've just held another meeting, and it looks like the news has been pretty decent since the markets are responding. Welcome to the CryptoFather channel. Today is the 20th of March. We're going to jump into the market and look at Bitcoin charts and, of course, look at all the news that is out there. There is also an announcement for a Solana ETF that's supposed to begin trading sometime soon. So we'll have a look at that article. And market cap has pumped. We're standing at $2.9 trillion, which is about $200 billion up since yesterday, I believe. 119 billion in trading volume. Pi is no longer on the trending list, apparently. Is it even on place 13? No, it no longer is on place 13. It has completely disappeared to place 21 because it's been replaced with a bunch of other coins that are pumping. Bitcoin at $85,000. Finally, everything is in green. Ethereum above $2,000. BNB at $617. Solana is having a nice pump, most likely due to the announcement of the ETF announcement that's come up. $133 right now. Cardano at 73 cents. Dogecoin having a bit of a run. Chainlink is also doing very well. Toncoin is at 34% up on the 7 days. Litecoin still at $93, and Polkadot dropped down to 25th place at $4.53. Do you remember the good old days in 2018 or 17 when Bitcoin Cash was pumping? What happened to that? And let's have a quick look at Meowcoin. Meowcoin is at $7 with a market cap of $512,000, and I expect it to dip a little bit further as money flows out of these markets, out of alts, into Bitcoin again. Taking a look at the Bitcoin chart on the daily, we're forming a green candle, so we've had a nice little upward trajectory along the 200 MA line here, and this is the first green candle in about a week. We had one here on March 15th, and then all the candles were trading. Bitcoin was trading below the 200 MA on the daily. This is the first green candle that is finally moving upwards on the daily. Let's see on the weekly. On the weekly, we're doing good. We've had 2 green weeks essentially on the weekly. So despite the massive dump that occurred from 94 all the way down to 80, and the week before that, that went out to 78, it recovered. Now we've had 2 green weeks on Bitcoin, so things are not that bad when you scale out. Essentially on the daily, it's not looking too great, but when you scale out on the weekly, we're doing a-okay, and we're still within the unclaimed territory, but I think most of it is recovered, has been recovered. So we may not necessarily see Bitcoin going back down to 73,000 if things progress as they have been so far with the FOMC announcements. So the next pump we should see, hopefully, a nice run up of 120% or so to $170,000, quite possibly. Let's wait and see. The Federal Reserve held interest rates steady on Wednesday, prolonging a months-long pause on rate cuts amid economic uncertainty fueled by US President Donald Trump tariffs. The price of Bitcoin and other cryptocurrencies, which rose on Wednesday morning, was roughly flat immediately after the central bank stood pat for a third consecutive time, but was still up 4% over the past 24 hours. It traded about $84,500 according to data provided by CoinGecko. The US central bank's decision was widely expected, leaving its benchmark rate at 4.25% to 4.50% after the Fed began slashing borrowing costs in the final quarter of last year. The Fed said that the committee will continue to monitor the implications of incoming information for the economic outlook. It remains following the announcement. Federal Reserve Chair Jerome Powell said the central bank's latest inflation forecast was a little higher than projected with December. It is going to be very difficult to have a precise assessment on how much of inflation is coming from tariffs, he said, adding that price pressures from Trump's trade policy may prove transitory. At the same time, Powell said recent indications point to a moderation in consumer spending, signaling that one of the U.S. economy's main drivers of economic growth may cool. An updated forecast weighing expectations from 19 Fed officials showed 2 rate cuts this year, effectively matching policymakers' outlook in December. The Fed's previous projections had poured cold water on risk assets as Fed officials had previously penciled in 4 rate cuts. In December, however, one Fed official foresaw as many as 5 rate cuts this year, or a reduction of 1.5% in the Fed's benchmark rate. On Wednesday, no Fed official envisioned more than 3 rate cuts this year, suggesting a firmer policy outlook. Fed keeps rates unchanged and maintains outlook for 2 cuts in 2025. The Federal Reserve is keeping rates where they are after their meeting on Wednesday, where the central bank announced that the federal funds rate will remain at 4.25 and 4.5, while sticking to its plan for 2 cuts in 2025. Inflation is still above target, but the economy is growing and unemployment remains low. Recent indicators suggest that economic activity has continued to expand at a solid pace. The central bank's goal is to maintain maximum employment while bringing inflation down to 2% over time, though the officials did acknowledge that uncertainty is rising and risks are increasing. The Fed is not just holding rates, it is also adjusting how fast it shrinks its 7.5 trillion balance sheet. Starting in April, the bank will allow only $5 billion in treasury holdings to mature each month, a sharp drop from the previous $25 billion. The $35 billion cap on mortgage-backed securities remains unchanged. We wanted to keep rates steady but continue quantitative tightening at the current pace. So the money printers are not going to be turned on just yet, but I am sure that that's coming. 4 policymakers now expect no cuts in 2025, up from just 1 at the last meeting, but most officials still anticipate 2 rate cuts next year, with another 2 in 2026 and 1 more in 2027. And the long-term expectation is for rates to settle around 3% according to the Fed's statement. So we should see a little bit more upside in the markets over the next couple of years, provided that these rate cuts do take place. And new Bitcoin whale surge. Could their massive accumulation spark the next rally? So with the announcement from the Fed, from the FOMC meetings, a lot more whales are all of a sudden jumping in to pick up a bit more Bitcoin on the cheap before the next pump. High net worth whales with 1,000 plus Bitcoins are accumulating fast, signaling strong confidence in Bitcoin. Since November 2024, new Bitcoin whales have added over 1 million Bitcoin, including 200,000 this month. A short holding period, 6 months, indicates strong conviction as current price levels. This sustained buying pressure suggests rising. Recent dips are being absorbed, reducing the likelihood of prolonged corrections. With risk of sentiment dominating the market, retail capital has yet to return. In this climate, the continued accumulation of new whales could establish a strong price floor, reinforcing Bitcoin's support in this cycle. And the first Solana futures ETFs in US set to begin trading Thursday, and we're assuming that Thursday meaning next week, or is it today? Because today is Thursday, at least here. Volatility shares, a Florida-based issuer of exchange-traded funds, will debut 2 ETFs on Thursday that track Solana's price using futures contracts in the US. The firm's co-founder and CEO Justin Young confirmed to Decrypt. The volatility share Solana ETF SOLZ will track Solana futures, which recently launched in the US through Coinbase's derivatives arm, while the volatility share 2X Solana ETF will allow investors to access amplified returns. Both funds will be listed on the Nasdaq as first reported by Bloomberg. Solana futures began trading on the Chicago Mercantile Exchange on Monday, generating 12.3 million in notional trading volume. Bitcoin and Ethereum futures debuted on the exchange in 2017 and 2022 respectively, which is probably why we saw such massive pumps in the year of 2022 and then 2017 and 2022. Do not presume that the crypto market is disappearing. There are companies that continue working on them. Whales continue accumulating. All the FUD that you hear about, crypto being dead or the retracements that we experience are just part of the market. In the end, markets always go up. So panic selling is not advisable. If you can manage to take your profits somewhere at the tops, nobody can predict the tops, but somewhere near to the tops, then do so, and then wait for the dips to accumulate more, like we saw right here. So right now we're going to wait on this channel together. We're going to wait for another pump and then take profits and then sit on the sidelines and wait for the retracement. If you are watching this video, then you are supporting the channel. And on this channel, the channel we're almost close to 5,000 subscribers. Oh, shoot, I hit 500 subscribers. Awesome. So this morning, the channel was like 2 subscribers short. I was sitting at 4,998, I believe. And right now it's official, 5,000 subscribers, yo. Thank you very much for your support. Thank you for being here and supporting the channel and coming back every time to listen to me. Make sure to smash the likes on this video, subscribe to the channel, of course. Thank you all for tuning in. Remember to pick up the Send wallet. I bring you that with a 30% discount on one, or $30 discount or $99 discount on a bundle of 2. Pick those up with the ref link below the video. Check out all the other videos on mobile mining below the video as well. There are references, ref links below this video. And of course, the videos are available on the channel. So check those out, and I will see you tomorrow. Man, I'm having a hard time talking. I feel I've got a potato stuck up my nose. Running some kind of mild version of a cold. Once again, thanks for your support. Thank you for tuning in. I hope to see you tomorrow. Have a fantastic Thursday. Peace out.